The conversation around which artificial intelligence business might someday ascend into the rarefied air of $1 trillion valuation has become one of the more fascinating debates in modern technology investing. Among all the contenders vying for that astronomical benchmark, the data analytics innovator Palantir Technologies continues to distinguish itself as a uniquely influential force. To understand whether this company could truly scale to that level, it helps to explore its technology, its structural advantages, its growth trajectory, and the broader dynamics shaping the artificial intelligence revolution. By taking this journey step by step, a clearer picture begins to form around both the promise and the risks that surround this ambitious target. Palantir has engineered a trio of artificial intelligence-focused platforms known as Foundry, Gotham, and Apollo. Each system addresses a different slice of the data ecosystem, yet all of them share a common purpose: transforming chaotic, siloed information into something coherent, actionable, and strategically valuable. Foundry is Palantir's flagship platform for organizations. Picture a company swimming in oceans of disconnected data. Financial records here, logistics databases over there, operational notes in another corner, and customer information scattered in 1,000 directions. Foundry steps into this unruly environment and restructures everything into a unified platform that allows businesses to observe connections, detect inefficiencies, and make more informed decisions. Whether an enterprise is trying to streamline supply chains, refine marketing strategies, or predict risk more effectively, Foundry provides the analytic infrastructure to turn messy details into meaningful direction. Gotham, by contrast, is marketed to agencies and defense partners whose missions rely on accurate analysis and rapid coordination. It supports national security teams as they interpret patterns, identify threats, and respond to mission-critical situations where timing and precision can make all the difference. Government agencies often operate with vast amounts of highly sensitive data stored across secure systems that must remain protected while still allowing for advanced analytics. Gotham enables that delicate combination, giving analysts the ability to synthesize information without compromising the safeguards built into high-security operations. Both Foundry and Gotham depend on Apollo, the unseen engine that delivers Palantir's entire ecosystem. Apollo distributes software across cloud systems, on-site hardware, and even heavily restricted networks that require strict oversight. In other words, Apollo ensures that Palantir's platforms remain updated, functional, and secure regardless of where clients operate. By developing not only its analytics tools but also the infrastructure that deploys them, Palantir has carved out a distinctive position in the artificial intelligence world. It is not merely selling software, but creating the connective tissue that allows artificial intelligence systems to function across commercial and governmental environments. This unusual combination, application-specific analytics paired with a proprietary delivery system, has allowed Palantir to evolve into a foundational player in both enterprise technology and national security operations. The company's performance over the past several quarters reflects that reality. As highlighted in its third quarter investor materials, Palantir continues to post robust growth and widening profitability. The market has responded accordingly, pushing the company's valuation to $408 billion. For Palantir to reach $1 trillion in market value, its stock would need to climb by roughly 145% from current levels, a goal that is mathematically clear yet strategically complex. Reaching such a valuation requires more than momentum. It requires an alignment of technological leadership, market expansion, investor confidence, and sustained profitability. What makes this even more challenging is Palantir's extraordinary price appreciation in recent years. Before the release of the artificial intelligence breakthrough known as ChatGPT, Palantir's market value stood at roughly $12 billion. Since then, the stock has surged almost 2,000%, driven by a wave of enthusiasm surrounding artificial intelligence innovation. Very few companies in the market's history have experienced that scale of acceleration in such a condensed time frame. To understand how exceptional this rise truly is, consider the company's valuation multiples. Palantir trades at a price-to-sales ratio of 112 and a forward price-to-earnings ratio of 237. Even in the world of high-growth technology, where investors willingly pay premiums for disruptive potential, those numbers sit at historic extremes. When valuation stretches far beyond typical industry ranges, it raises important questions about sustainability. But at the same time, demand for Palantir's platforms remains intense, and the anticipated market for artificial intelligence software, estimated at $13 trillion, suggests enormous long-term opportunity. In other words, the story is neither simple nor one-sided. This is where skepticism begins to play a meaningful role. While Palantir's growth potential is significant, the capacity for its stock to continue outperforming at the same pace becomes increasingly challenging. Valuation expansion has limits, and once those limits are are reached, earnings must grow rapidly enough to justify the premium. The danger is not that Palantir lacks innovation or demand, but that expectations may be running so far ahead of fundamentals that even exceptional performance might not be enough to satisfy investors. When a stock becomes priced for perfection, any hint of slowing growth, even if temporary, can trigger sharp corrections. With such lofty valuation multiples, Palantir sits in that precarious position. Institutional investors who often hold large positions in high-growth companies may begin considering profit-taking strategies after such a massive rally. When large pools of capital rotate out of a stock, even temporarily, it can cause downward pressure that has little to do with the underlying business. That possibility becomes more likely when a company's valuation stretches into rare territory. None of this means Palantir lacks long-term promise. Far from it. The company's technology is deeply embedded in industries and government agencies that depend on accurate data interpretation. Its role in advancing artificial intelligence adoption across both the commercial and public sectors gives it a unique structural advantage that could support expansion for many years. The question is not whether Palantir will continue to grow, but whether that growth can keep pace with the extraordinary expectations investors have attached to it. Palantir could indeed reach the trillion-dollar mark someday. Its software footprint, its innovation pipeline, and its market opportunity all point toward a future filled with possibilities. But assuming it will be the next artificial intelligence stock to hit that milestone stretches into optimistic territory that may not fully account for valuation risk or market psychology. Long-term potential remains strong, yet the stock appears stretched in the near term, making caution a reasonable stance even for bullish believers in Palantir's future. Essentially, Palantir Technologies has rapidly evolved into a major force in artificial intelligence by building powerful data platforms for both commercial businesses and government agencies, using Foundry, Gotham, and its distribution system Apollo to help organizations turn complex information into practical insights across secure environments. This dual market presence has fueled enormous growth, lifting the company to a market value of $408 billion, yet reaching $1 trillion would require the stock to soar by roughly 145%, a challenge made even tougher by its nearly 2,000% rise since the debut of ChatGPT and its historically high valuation ratios, such as a price to sales of 112 and a forward price to earnings of 237. While Palantir has a strong long-term outlook supported by rising demand and an estimated $13 trillion artificial intelligence software market, the stock appears overextended, raising doubts about whether it can maintain market-beating returns as institutional investors may begin reducing exposure, and any slowing growth could cause sharp sell-offs due to perfection-level pricing. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.